Shares of Facebook have plunged some 50% since the social network went public in May. At the time of IPO, critics warned that shares were priced to perfection and had nowhere to go but down. With a lofty price-earnings ratio of 88, it wasn't hard to predict. Of course, hindsight is 20/20, and today shares trade at a more reasonable 37 times 2012 estimated earnings. So does valuation finally warrant the stock a buy? One Wall Street analyst thinks so. Joining me now on the Wall Street Report Newsline is Scott Kessler, head of technology sector equity research for S&P Capital IQ. Scott, thanks so much for calling into the show. It is always great to speak with you.
Good speaking with you too as well, Jennifer. Thanks.
So you initiated coverage on Facebook with a sell rating back in May. You now have a buy rating on the stock. Is your call basically based on valuation?
Well, look, it's been a long road, it seems, for only 3.5 months of trading for Facebook. You're right that we initially had, I'd say, a pretty skeptical view of the company and the stock. Frankly, over the last couple of weeks, we became positive on the stock. Our reasons for upgrading the shares definitely are somewhat rooted on valuation, but also a greater level of confidence in the company's fundamental outlook as well.
Okay, I want to drill down on both sides. First, are you concerned there could be some downside risk here, given that this fall we're going to see a number of lockup periods expire, with over 1.4 billion shares potentially available to come out from under lock and key?
Yeah, we upgraded the stock as we were heading into the first of a number of scheduled lockup expirations, in part because we felt like at the depressed level, the shares weren't necessarily going to be aggressively sold by insiders and employees who have been involved with Facebook for a long time. That being said, though, the rationale really for our view is the fact that we believe that the fundamental outlook is pretty solid.
But Scott, what about the fact that there are concerns about the revenue model, right? Advertisers are still skeptical about whether their ads translate to sales. So, I mean, where do you see the growth coming from? There's also the issue of mobile, that the fact that mobile users are outpacing ad sales now. Is Facebook going to catch up on mobile? Is that where you see the greater sales growth generation?
Yes, there's no question that there has been some pretty public criticism or questioning of what Facebook can offer in the context of benefits to advertisers. Facebook, on their Q2 conference call in late July, talked specifically about companies getting brand lift, increased awareness, and substantial ROI on its investments on their advertising platform. And I think the company is not only very focused on delivering those types of benefits to advertisers, but also, more importantly, making people more aware of the different types of options and the different types of opportunities that the company and the platform itself offers. To be frank, I think that a lot more companies make effective use of Facebook and see returns on those advertising investments than we probably have a sense of, and more importantly, than the market appreciates. In terms of mobile, I think it's fair to say that this has been an issue that's confounded a number of internet companies. We were in Silicon Valley last week meeting with companies, including Facebook. The reality is, I think the company has shifted its priorities to more about mobile and monetization, and the company stated pretty clearly that those were two of the biggest spending priorities for the company over the next year or so.
Right.
And what they did was they released a product called Sponsored Stories for Mobile in or around March. And really just in a quarter or so, they were generating revenues approximating $1 million a day from sponsored stories, and about half of that was from mobile. So you're talking about $200 million run rate from sponsored stories from mobile, only a quarter out. So we think that product without a lot of runway, without a lot of refinement, frankly, has already shown that it can generate significant revenue and significant growth.
Scott, do you think the rest of Wall Street is going to begin to recognize these positives now that perhaps valuation is at a more reasonable level? It just seems like there's been so much negative sentiment surrounding this stock. Finally, we saw the company come out and make a statement that CEO Mark Zuckerberg is going to hold on to shares for a year, or they're going to initiate essentially the equivalent of a stock buyback, sort of earmarking 100 million shares of employees that will be kept off the market for tax liabilities. Has that put a floor in the stock, in your view, at these levels?
Well, we really hope so, Jennifer. I think we've become increasingly constructive, actually going to a buy recommendation just a couple of weeks ago, in part because we have a greater level of confidence in their focus on both mobile and monetization as big priorities going forward, as well as you pointed out, the valuation coming in to a point where we feel like it's reasonable. You know, you talk about the multiple on this year's expectations for earnings, but on next year's expectations for earnings, Facebook is trading at 30 times next year's estimates. And if you X out the $5.42 in cash and investments the company had at the end of Q2, you're talking about a stock that recently was trading at a little over 20 times next year's earnings, X cash and investment.
All right, Scott, thanks so much for calling in the show and sharing your insight. I so appreciate it and hope to speak with you soon.
Sounds great. Thanks very much for having me.
Scott Kessler, Head of Technology Sector Equity Research for S&P Capital IQ.